Hello and welcome. You're watching Midcap Masala. You're joining us live from the Suzlon studio, and let's get focused on the conversation that we have lined up for you. We've got the management of Marathon joining us on the show, and we have Mr. Parmeet Shah, the director at Marathon Group, joining us on the show. Mr. Shah, hi, morning. Good to be speaking with you. You know, big positive news for your company. You have entered Mumbai's society redevelopment segment with a premium residential project in Versova. Now, speaking of society redevelopment itself, that is emerging as a large opportunity in Mumbai. What has prompted your entry into this segment now, and how sizable do you believe this redevelopment opportunity can become for the company?
Sure. So, if you look at the history of our company, we have majorly focused on these very large land parcels, where we have these very long-term township projects. This has served us very well, and even in the early 2000s, we actually pioneered the mill development. So that was another area where we expanded. But if you really look at what's happening in Mumbai today, these kind of opportunities where back in the day could acquire 50 acres, 100 acres, have these huge projects, those kind of opportunities are dwindling. And, left, right, and center, wherever you see, there isn't any big, large parcels, that's becoming more and more scarce. So we've been seeing that develop over the last couple of decades, in fact, and which is what has prompted the redevelopment strategy. And on that front, I'm sure anyone who resides in Mumbai, you just need to look around and you realize how big, the redevelopment market really is. There is, left, right, and center, even on the smallest of plots, big towers popping up. So that is basically a symptom of what has happened to land in Mumbai, where most of the land is already owned by societies. There are already buildings existing on that land. So which is where it becomes, a huge opportunity for us, and having a strong brand in Mumbai. We have decided to sort of leverage that brand, and enter into society redevelopment, where most of the societies are receiving us very well, and they're very happy to partner with us and work with us. It is a shift in gears, but of course, at a very opportune moment, where the market is really shifting in that direction.
Mr. Shah, that sounds good. Let's talk about your financials and more importantly, how FY27 is looking for you. Now, when I talk about FY26, that has marked a milestone for the company because you have turned net cash positive for the first time while also delivering record profits. How does this strengthen your ability to pursue for your future growth opportunities?
So, just about, last June, so just about a year ago, we strengthened our balance sheet with a 900 crore QIP. So that showed, the belief, in the company, from the investors. This was our, first major equity raise. So that really, on the balance sheet side of things, helped us in the sense that we could retire most of our debt. So we are practically debt free today, which is, quite an achievement for a real estate company because it's a very capital intensive business, where, you have to invest hundreds and thousands of crores in projects. So that has given us a huge boost, so our interest costs have gone down, which is what is being reflected in a much higher, profit after tax. And now it positions us very strongly to go out and do more acquisitions. When you approach societies in redevelopment, they are some of the smartest people. They know everything about everything. They know more about your balance sheet and your financials than you sometimes. So these are things that help us a lot. Not just in terms of our brand, but even in terms of showing our financial strength, to be able to partner with societies.
Okay, understood. And let's talk about the residential bit of your business. Residential projects account for a large share of your upcoming pipeline. Do you expect the residential segment to remain your primary growth engine over the next few years? And what would the residential commercial mix be?
Great question. So actually, at the moment, if you look at the last maybe 10 odd years, we have had a huge commercial portfolio as well. Marathon Future X being, one of the biggest projects, commercial projects in the city, and definitely the biggest project for us. So for the last 10, 15 years, it has been, I would say, about 50-50 if I look at it in terms of revenue. And going forward, definitely residential is, a huge, target for us. And we are still yet exploring commercial opportunities. The thing with commercial opportunities, we consider them equally important. In fact, because it's only the big brands, with a lot of financial strength that are able to do commercial development in Mumbai today. Because you have to construct the entire building, so you need a lot of holding power, and you need a lot of financial muscle to be able to do that. So having had a strong record in commercial, we are definitely exploring, a lot of commercial opportunities. But of course, when it comes to society redevelopment, that becomes exclusively residential. So in that sense, we are creating a platform, for society redevelopment, and we plan to explore and tie up a lot more projects on the society redevelopment platform. So that, of course, will add a lot to our residential side of the business.
Okay, understood. And Mr. Shah, you spoke about the QIP and the strengthening of the balance sheet. So now with a stronger balance sheet and an expanding pipeline, should we expect a more aggressive business development strategy, including some more projects on the redevelopment front or any land acquisitions over the next 12 to 18 months? Can you tell us what's in the pipeline?
So of course I can't, especially right now we're in the silent
Oh,
period,
sure,
so I'm not
absolutely.
able to make forward-looking statements. But what I can say is that absolutely, getting, having a balance sheet strengthened, because of the QIP. Since that moment, we have been looking and exploring all kinds of opportunities, and yes, we, so basically, if you really look at our business, we already have hundreds of acres of land parcels that we are developing. So we are obviously investing more and more in them, in the existing projects. These are very long-term projects, that have been running for the last 10 years and probably will run for another 10, 20, 30 years. But at the same time, we are looking at, business development, new acquisitions, and definitely are aggressively looking at opportunities now that we have funds in the bank. So definitely optimistic about that as well.
Understood. Mr. Shah, are you seeing any challenges on the construction front in terms of increased costs because of the war impact? Had that increased when the war was at its peak, and has that softened now? What has the impact been in terms of, let's say, construction costs, cements, tiles and ceramics, plastic pipes, for example, and of course, labor costs? Any big fluctuations over there?
So, quite frankly, yes, of course, it has impacted the business. There have been a rise in costs across the board. But frankly, I think the industry has sort of adapted. The supply chain has adapted, and it has not been, that major a shock. It's and comparing it to something like the pandemic, and the post-pandemic time when literally our raw materials, they shot up by 20, 30, 60%. So it's been nothing like that, but there has been some impact. I see now at this point, it's stabilizing a lot. And what I'd also like to say is, we are used to such challenges. We are used to such externalities being in the real estate business. We have learned to deal with such hiccups.
Understood, sir. That sounds optimistic, and of course, not such a big shock as the one that you saw during COVID. So at least that statement is good to hear from your end. But Mr. Shah, let's talk about the premium segment, particularly the premium housing segment. That has remained resilient despite elevated property prices, of course, on the back of this war impact. So first, are you taking any pricing action to mitigate these costs? And second, basis whatever pricing action we've already seen in the industry, how would you gauge what the demand is like right now? Has that seen a moderation, or does the strength of demand remain robust right now?
The strength of the demand in, especially in residential real estate in Mumbai, frankly, personally, it always surprises me, because even in the worst of times, and I'm sure, you would remember, when at the, after the pandemic, the government had come up with this, stamp duty discount. And that month, in the middle of the pandemic, you saw absolutely every record in Mumbai real estate being shattered. So at the lowest of the low points, residential real estate is always strong, and I've seen this, when I just entered the industry in the 2009 period as well, when the entire global real estate market had crashed. So residential real estate, frankly, that's where it's even surprised me how strong it bounces back. There is in the industry, we are always worried about too much supply, too many projects being launched, and I'm sure that's what you see around you as well. Where it's like, how is there so much development happening? So we have the same feeling, but then the demand always catches up. And then everything ultimately gets absorbed, and then so many times I have found myself being pessimistic or on that front. What I can tell you is that it's the same story today. Very, very strong residential demand. I
Okay.
think we are again breaking every record, and in terms of the price action,
Right.
frankly, that depends a lot more on the, on the market dynamics, not so much on your costs.
Okay.
But the good news there again is, even with so much supply, I am seeing across the board in Mumbai, prices ticking up, and this has been happening over the last couple of years. So that's been positive news for us and the entire industry.
Shah, that sounds really good, and hope to keep speaking with you. And yes, the marathon Future X, the project that you mentioned, right across the road from us at Lower Parel. So
Yeah,
next time we hope to see you in the studio.
absolutely. Very nice
Thank you
talking to you.
so much. Thank you so much for your
Thank you.
time. So good to be speaking with you.
Thank you so much.